I'm going to show you step by step how we do it. Essentially, we're going to be starting off on the 15-minute time frame to build essentially our entire foundation of structure. So the 15-minute time frame, if essentially we just zoom out, just so we can get an overall higher time frame picture of kind of what price is doing, it's very clear to see that, you know, price bottomed out, created a new high, higher high, created a higher low, and then a new higher high. And then price has essentially taken out this low right here, and then price has shifted bearish. So on the higher time frames, the price has oriented to become bearish. Then as we dive into the 15-minute, which is our most relevant time frame in essentially which we, you know, can trade, I'm going to essentially pull price back because I'm going to be taking you through this trade. Let's pull back just before the trade. Let's just zoom out for a second and understand that the most recent levels of key structure are the low right here that puts in this high, then this high puts in this low. And so at the point of that, essentially we are ranging from this high right here to this high, to this low down here, sorry. And essentially what we're expecting is at the point where price hasn't already broke this, we would be expecting price to come up into this region and then make a lower low. Price failed to do that. So since price has broken the high right here, which is a change of character to the upside, we would then be looking at if price wants to continue bullish, it will need to pull back and then put in a new high. So if we go back into internal structure, we'll say that this is the low that put in this high. And because it failed to break these highs, it would make it weak. However, if you look closely, what you will see is a bunch of built up liquidity in the form of equal highs or resistance levels, whatever it is you like to call it. And essentially we see price from this low sweep the high and then essentially give an instant change of character back to the downside when that was taken out. Change of character down. So we see price essentially just sweeps the high and then changes character instantly. Price then from this high, this is the low that it puts in, so price is ranging from this low to this high. So at this point we'd be expecting price to pull back into, you know, an area of supply inside of this price leg, specifically this area of price, and then give us a reaction and then go and put in a new lower low, which is exactly what price does. Then we are essentially ranging from this high right here to this low right here, again expecting price will come up somewhere inside of this price leg. Now, because this is such a large supply zone, it's this entire level, we're going to go ahead and drop down to the 5-minute to see if we can refine that level, which you can indeed see that you do. You can refine the level to the last pivot move, which is essentially where the volume came in, the reversal took place, where essentially we had the break of structure. This is the supply level that caused it. And as a result of that, you can see that price essentially taps into this level, pushes down, fails to take out the low. So we could expect at that point that this high maybe ran and then further mitigated on this level. That doesn't happen. As you will see, that ends up being our high. And then after that, price essentially, we are waiting for price to take out this low down here. Now, what we notice is as price puts this low in, price ranges between this low and essentially this high up above here. And you can see price moves in a very rangy manner, building liquidity on essentially both sides of the market. And then what we see is price bottoms out here, comes up, pushes up, comes back down, reacts from the exact same price point as here, giving the reaction to the upside. Now, this right here is essentially perfect liquidity because what it is we have lows here. There are liquidity money in the market that has come into the market. So we know that we have buyers for the sellers, and this is a liquid region as there will be orders in and around this level, long and short. So we know there is a level of liquidity. So built up, price pushes up, doesn't break anything significant, which is perfect. Then price takes out the low, causing a break of structure. Now, the break of structure to the downside essentially comes from this high, because if you mark it out, you will see that this is the low that puts in the high. Then this high really, we range, and then you could call it this high, or this high, that puts in this low then puts in this high then puts in this low. So at that present moment right there, we are essentially just ranging from this high and this low. And that is essentially all our trade idea is based on. It doesn't need to be super difficult. You just need to understand the basic concepts essentially of structure and the multi-time frame nature of structure, and then combine that with liquidity inducement and supply and demand. So what we then notice is that we have an area of supply right here. This is essentially the pivot created supply that broke the most recent lows, which were down here, which is also the low of here. So there is our break structure. So from this high to this low, price pulls back. We have a perfect level of inducement right here, perfect level of liquidity inducement right there to be taken out to facilitate the move. Then you can see price gives a essentially rounded correction back into our supply zone, which is a good sign. What I mean by that is price starts to move up, then it starts to build liquidity, and then impulsively heads into our supply level. That is a good sign of a good reaction, instead of it just being a, V reaction, which we wouldn't want to see. What I do notice then, as soon as we tap in, is we only wick into the level. So we've tapped very minorly into that level. And this is a common thing that you will see is when you tap so minorly into. Two reasons. Number one, early sellers are getting involved in the market. They are too early. Number two, the complete amount of orders that rest in this area. Just see this entire area right here as a pool of orders from banks, from financial institutions, from the algorithm, from whatever it is. There are huge amounts of sell orders inside of here. And for price to just tap in so, weak doesn't show you that it has collected sufficient amount of orders. It's had some reaction that has pushed price to the downside, but to me, I would be looking at that as liquidity inducement, and as the reason is there are just more orders. This is a big zone and it's tapped so lightly in. And that isn't wrong, because essentially price has a nice reaction out. So that I would consider a nice reaction, but still a area of liquidity, as there are still likely orders inside of this area. If you would have taken a trade out of this level, you wouldn't be necessarily incorrect. If you were in a trade, you would probably be stopped or at a break even as soon as possible. If we just move to the 1 minute time frame and essentially take a look at what we see. I don't see any real area where you would have got into a trade. You could have got into the market essentially on the down, up, no, only takes it out with a wick. Yeah, I don't really see a significant level of entry in that area anyway. But then let's essentially continue to play price out and wait for that sweep of liquidity so that we can then look to move to our lower time frame to get involved. So beautiful sweep of liquidity. As you can see on the 15 minute, very clear wick. A wick is an incredible sign of a pure sweep of liquidity. And so then we are able to drop down to the 1 minute time frame. So the 1 minute time frame is essentially where we are going to be looking to get into our entry. But before that, if you guys have enjoyed the video so far, please go ahead and smash that like button and subscribe to the channel. It helps us out a lot, and we can continue creating these free videos for you guys. So we sweep and tap into the area where we know that there are orders. Now we have to decipher where is the change of character. So let's take a look at the simple market structure. We can see that price puts in a low, high, low, high, low, higher, high. So we know that now price is ranging from this low right here. Price is currently bullish on the 1 minute time frame. So we need to wait for the 1 minute to become bearish as well as the 15 minute. If you zoom out right now, you can see that the 1 minute is bullish. We essentially need this low right here to be taken out so that the 1 minute can realign with the 15 minute. So playing price again, and then what do we see? We see a further sweep of the high, which puts in a new low and a new high. So now we have a new low and a new high. We move the range high and the range low, because this is where price is moving. You can always do this handy tip. Mark out the low, mark out the high, and price will trade in between it. And then once one of the highs or lows break, depending on what direction you're trading in, of course, will be the outcome of it. So it'll be a change of character or a continuation. So price then sweeps the high, but that's not a significant pullback, in my opinion. A couple of candles, we need to see like a significant level of pullback to be considered at least structure. I mean, you could technically use it, but we're going to be sticking with this. We want to see the real, true realignment, change of character to the downside, and then playing price out. So price has the change of character. Now we're looking essentially where do we get involved in the market. So for me, there's two areas in this specific level. There is area number one, which what we call the origin level, which is the origin level of supply. And then there is level number two, which we call the decisional. The decisional is a range created level of supply, and then we can go ahead and refine that to a pivot created level of supply. So pulling that across, essentially that's where we're going to be looking to take our trades from. Shorten from the entry level with stops just slightly above. That's a 5.5 pip stop just to give enough for spread. And then essentially we also have half of the position split across the original entry, also a 5.5 pip stop loss, accounted and adjusted for spread. Where are we looking to take our profits? Interesting question that I always get asked. Well, if we know that the 15-minute is bearish and we know that likely the 15-minute is going to take out this low down here because it is a weak low and it is unprotected, then why not take your partials at that level, or even full take profit at that level, depending on the higher time frames. So that is essentially our full take profit for this trade. We have a 1 to 15.5 and a 1 to 13.2 risk to reward, which averages out around 1 to 14. And then essentially we just wait for one of them to play out. Either scenario number one is essentially this. Scenario number two is essentially this. And of course, scenario number three is, something like this, where it just takes both the stop losses. And all of those are equally probable, not equally probable, but all of those are possible scenarios. And that is something as a trader we have to accept. We are now risking our capital because we believe that we are correct. At least this aligns with our statistically proven system. So it's our job as traders to take the trade. And that is what allows me to manage the psychology of taking trades, is understanding that it might be a loss and that is okay. So price taps into the decisional level and not this level. Now, I would usually keep this order on until the low is broken, because that clearly shows me that we have already essentially initiated the sells that we're waiting for. So we can go ahead and remove this order, take out this, and then you can either do one of two things. You can take off 25% of the position at 1 to 4, which solidifies the one risk that you've put on the position, or you can just move your stop loss to break even, whichever essentially suits you. And then essentially we can just allow price to play out, and essentially it does hit full TP for 1 to 13. I do hope you guys enjoyed this video. Please leave a comment down below if you have any suggestions for next week's video. Thank you guys for watching.